Hello, everyone, and thank you for joining today's live stream. My name is Tammy DaCosta, and I'm here to bring you the latest crypto news. Thankfully for bulls, it has turned slightly positive, and that's after quite a dismal performance, not only in yesterday's trading session, but in the first quarter, which ended yesterday. So now it's a new month, and there are still a lot of threats that are currently in sight. So let's just go and dive straight into it. Okay, so currently, if we're looking at, this is just the CoinW homepage, we do see the price of Bitcoin, and this is over the past week, is still down approximately 4.56%. Now, if we are focusing on these prices here, just remember there is a difference between the cash or the spot price and then between, the futures. So on the day, currently, it's not, well, it was looking quite a lot more upbeat. And now we are seeing a bit of a retracement. But we are going to look at this on a shorter time frame. And then we'll obviously go into the chart in more in depth. For those that follow fundamentals, I do quickly want to see, we did have the economic data that was coming out, and that was just with regards to the US ISM data. So if I am looking at those stats, let me just actually put this on the screen, and then we'll go from there. So on today's economic calendar, what we had was also very important data from China, which was the manufacturing PMI, and that actually came in better than forecast. And I'm not going to go into too much depth with regards to this, but this is really, really important. We had ISM manufacturing PMI, and that's a measure of sentiment for the manufacturing sector in the US. Now, that actually came in below expectations. So now this also adds into a bit of fears, and especially that, a lot of it is surrounding the tariffs, and we will also discuss that now. But we've also had jobs, job openings, which show the number of new jobs available for February, because it is backward looking. And once again, we also saw a miss in expectations. So overall, for the US economy, the data today just basically reiterates the fact that those recession fears shouldn't be ruled out just as yet. So let's go to some fear and greed, and let's look at how that's panning out, and then we shall get into it. So the crypto fear and greed index, we're still in fear territory, and we can see that overall, a lot of that fear was coming in the first quarter. So just as a whole, that first quarter was not a good one. Not for cryptocurrency, not for other risk assets, but if we were looking at an asset like gold, it was absolutely fantastic. Gold is still reaching new record highs, and this all comes in or ties in with the economic environment. So let's look at what's been happening today, and we'll start off with Bitcoin. So on a daily time frame, we do see that the candle is still currently, for today's price action, currently we are still trading in the green, or on, if you're looking at my screen, it's in the blue, and prices are trading roughly 1.5% higher, and that is on the futures contract. Now, if we have a look at what happened yesterday in yesterday's session, or even the past few days, we can see that one thing that did manage to also help cap prices was the 20-day moving average. And even I've added these moving averages just as like guides to show you some price action. And then we've also got some Fibonacci levels, which a lot of you will know that I am a believer in Fibonacci. So if we just take into account the first quarter, and that was January, so the beginning of Jan up until yesterday, the 31st of March. So if we look from January's all-time high, which is when prices reached, and that was Inauguration Day, the prices reached 110,150. So that was a fresh record high for Bitcoin. And that was obviously extremely different. Well, it was a really big breakthrough from the levels that we had seen in October, or well, even before that in March of that year. So let's go to the monthly time frame just to talk in, with regards to the general price outlook and just how some of those key levels have helped play a role in driving price action previously and could actually come back into play. So this is the monthly chart. And as I said, if we look from 2020, well, basically from March 2020 and then up until the November 2021 high, and that was the prior all-time high before the new burst in upward momentum, we can see that obviously there was a big rally and then there was a sharp pullback. And what happened in this time frame was institutions said they're going to get into Bitcoin. And then we had the regulatory uncertainty again. We had Tesla then saying, okay, it's actually not going to be accepting. There was like a lot of a gray area. So then we had that regulatory uncertainty, pullback, November 2021 high, and then change in interest rate environment. So we do see that fundamentals did play a role. However, what we can also see here is after recovering from the 2022 lows, we can see how prices managed to break through that prior 2021 high in March, but then look what happened. Basically, prices just went down and a broader zone of consolidation started occurring. And then we had November, and then obviously the announcements, the Trump announcements, and then we had prices break through that level. So I've continued to say that this level is really, really crucial, or at least, from the top here. And now, if we did take the 2022 to 2025 move, which would only actually impact prices going forward, because obviously this move only recently occurred, what we will see is, in hindsight, two other Fibonacci levels, or just from there, the 23.6% retracement of that move is now providing resistance at 87,675, and then that 38.2% retracement of that same move is now coming in as support, medium-term support at 73,775. And that coincides with that March and the October highs. Okay, so once again, really, really important level of support that I'm currently looking at. And then for the current trend, when we go into the shorter time frame, then what we are looking at is that support. Now, it's not only the monthly support. We aren't only saying, okay, it's actually, last month's low. It's also now the quarter. It's basically support the lowest level that prices have gone in the last quarter. And actually, since, to be fair, so since October. So we will be looking, if there's a break of the 76,735, then I would still be more on the bearish side. Okay, but let's go to today's price action. And there was also some excitement this morning, despite those tariff threats. So tomorrow we are expecting Trump to announce those reciprocal tariffs. So he's been saying that the US has been taking advantage of, and he is saying most countries, they basically export more to the US than they are importing, and they have high tariffs and taxes on certain products. And so Trump now has said tomorrow he is now calling it US Liberation Day. And he said now basically it's time to set the board straight. And, he's announced that there are quite a lot of tariffs now that are going to be implemented. Or so this means there's going to be a lot of taxes announced on other countries, on any like goods and services and so forth. So this has pressured the global economic environment, and that is also why we've seen that risk-off sentiment after all the positive news and the expectations of a crypto reserve and so forth. After all of that, that is why prices, even on Inauguration Day, and even when that announcement of the strategic reserve did actually occur, we could see that the momentum of the uptrend just was not strong enough to hold. And rightfully so, because we have seen so many months now of that progressive gain. We saw Bitcoin prices that were already soaring throughout last year, and then we saw prices, well, in 2024, basically Bitcoin added another 123%. And that was just the last quarter. So we are retracing and we are taking back a lot of those gains while we've basically wiped out a lot of them. And now it turns to, okay, fine, what happens next? What's happening with sentiment? And a little bit of relief was provided this morning by, well, previously MicroStrategy, and now they've changed to Strategy. Now they added onto their positions, and they're the biggest institutional holders of Bitcoin primarily. And they had been saying that, they want to actually get to a point where they are holding 1 million Bitcoin. Okay. They are above their recent purchase, where they spent an additional $2 billion, if I'm not mistaken, now puts them over 500,000 Bitcoin. So they're in a good position. But for sentiment, it does us a world of good, because once again, we've seen how prices have been struggling to hold above, I would say, the 90,000 handle. So yes, we did get that positive, or we did get that break below in March. And this is, as I said, on the futures, so it's not taking into account the weekend trading. So I can't say that it's actually like a break without looking at the weekend trading. But from here, what this shows me is the fact that there's a gap on this specific chart means that there was a change in expectations regarding the crypto environment. But then look at what happened when prices get to the 200-day moving average. And what happened, we did have a bounce off of there. We had a bit of a pullback to 76,735, which marks the March low. And then what happened was we saw a swift rebound, and that gap was closed. And then that 23.6% retracement of that move that we mentioned, and the 90,000 psychological level then came into play, and that formed a very strong barrier of resistance for bulls, which still remains intact at the moment. So what do we need for the short term? Well, what would really, really be nice is if, for example, Trump is at least nice, and maybe, with regards to tariffs, and if they are a bit more isolated towards individual products, or if there is still space for agreement, then that could actually provide more positive sentiment for the crypto rally. And then we'd have to see what unfolds with regards to, the regulators and that. And he has also asked regulators to try push forward the scope of the crypto reserve agenda, and that could also actually take place as early as tomorrow. So tomorrow is a huge day for markets. And as we see with regards to the candles and with regards to volatility as a whole, there is still a lot of volatility. But for now, okay, prices are trading 0.88% or 0.9% higher on the day. And we can see, once again, we did get a test, the potential retest of the 85,000 mark, which is the 20-day moving averages. The 20-day moving average. But we haven't seen any follow through. And as I said, we can see that's a quite a long wick, which means that the body of the candle is actually representing, the actual open and closing prices for the day. But this is showing us that there was bullish momentum. However, as soon as prices got to this level, then bears or sellers at least came back and they did push, or they managed to push prices lower. Okay, so sticking with Bitcoin. Now, what I found quite interesting is even if we just use moving averages, okay, we can see that there's quite a lot of important levels that actually form from there. All right, so for now, what we can do is I'm going to ignore the 50-day moving average, which is the pink line. And I am going to put it as, I'm going to change the chair. And we are going to set the 3 month, okay, the 3 months moving average, all right. So that would represent the past 3 months, okay. So no, let's change it there. Okay, so another important level that we've got currently is if we are, here we go. So 88,734 is also as the 6 month moving average. So we spoke about how the last part of the quarter, or at least the last part of last year, let's go back to the monthly chart. We saw how the last part of last year was when we really got that like follow through and that break of the prior all-time highs, and we got that fresh boost of momentum. So now prices once again, like, they rallied sharply, and now another level, if we take into account the past 6 months, which would be a reflection of the last 2 quarters, we can see how this has now played out. And now that moving average has come in, okay, over the 6 months. So now it's sitting at 90,859. So we see additional pressure around, especially that 90,000. That handle is crucial on a lot of levels, on a psychological level, on behavioral, and also if we look at historical or the past few weeks, the 90,000 zone has really, really come under a lot of pressure. So we just look at the past 4 weeks here, and actually, so there, once again, it goes back to 88,734. So the 6 month moving average, obviously it adjusts with prices. That is now, okay, so 88,734, between that and the 90,000 zone, that zone is crucial, especially for bulls and especially for momentum to actually gain traction towards the upside. But if we're looking even on this chart here for the weekly time frame, and let's just put a line that's been capturing those support levels, and we can see this line is around 82,110. So this has managed to capture, for the March low, that week that we were speaking about, we can see that even though prices tested 76,735, they managed to close the week around that same level that was discussed, and that is just short of 83,000. Once again, we are seeing that same level. Now, this is the current week candle. So this really, really does depend. There's, even though we have seen a bit of upside, those recession fears are really posing a headwind for the crypto environment. So Bitcoin still has a lot of headwinds to clear before it can actually drive prices above, as I said, 90,000 is the critical zone, and then we can talk about a potential retest of 100,000 and maybe 110, 150. I think a lot is actually riding on this week for the crypto environment as a whole, but for Bitcoin, it still remains like it's got that little bit of a safe haven appeal, especially for the crypto environment. So even despite all those fears that have been setting in, we have seen, as I said, a brief rebound or recovery in crypto prices today, and that is still positive for the industry as a whole. So let's see what tomorrow holds for Bitcoin. Now let's look at Dogecoin. And for Doge, so similar scenario. Well, for Elon Musk, we know that Elon Musk is now running the Department of Government Efficiency, which is Doge. But he did mention the other day that Dogecoin will not be part of he did say something about, investors mustn't think that the Dogecoin is now going to be the next reserve currency. So that had a bit of a bearish sentiment, but I think currently, as even disputing those or not even accounting for those remarks, we have seen once again when Elon Musk actually stepped into that role and was appointed as the Department of Government Efficiency, the leader, we did see a lot of boost, or even the fact that he's now got a political role to play, that obviously drove Doge. For example, to look at November, in November, it was trading at 0.17437, okay? And then, look at where prices went, and that was the December high, it went 0.4192. So once again, we saw a lot of these coins, get extremely, the hype was really hyped up after the announcements of Trump. And then we've seen those gains because now there's still a lot of uncertainty and other risks to now take into account. However, the 20-day moving average for Doge, which also provided support, and it was actually providing support back in November at around 0.17439, and now it's basically taken on the roll, and it's gone from support, and it's now forming as current resistance, and that would be at that same. Let's see here. Oh no, sorry. Okay, so that wasn't making sense. Okay, so if we look, so it was in November that 20-day moving average provided support at 0.14552. Okay, by the time it was providing support in December, that moving average, the 20-day moving average, was sitting at 0.419. So we can see that it does follow prices, so hence why it was higher. But now it has still, throughout that moving average in providing support and resistance. So now this is the current SMA at 0.17439, and that is now our imminent zone of resistance. Above that, we would have the $2 mark is also quite not $2. The 0.2 level is also quite an important zone. And if we look at the March high, let's have a look there. That would be another zone that would need to actually be cleared, and that is just below. So that is at level 0.20578. Okay. And just below that, we have the current 50-day moving average, and that would be at 0.20316. So as I said, the next big level there that we'd need to have a break of is 0.2. But the fact that we also had a firm level of support, and we had an appearance of the Doge candle in yesterday's trading session, it does give us a bit of, there is some hope, because we did see a zone of consolidation and a big zone of support already forming at the current support zone, and that was after the March recovery. So it has been holding as a zone of support, and I think this will be a really, really big zone. If it is broken, then I am expecting Dogecoin to have further additional selling pressure, and I wouldn't be ruling out for prices to go back towards the 0.13 level. So that's my perspective of Dogecoin. But for today, it is also enthusiastic. This morning, it was performing really, really well. At one stage, it was up about 5.6%. We are now giving up some of those gains, and obviously, tomorrow is getting closer. We just had negative data for the US with regards to sentiment, and that is going to have an impact on the crypto environment. Okay, let's just go back and let's just look at the market overview. And so as I said, this morning, Bitcoin was really ripping higher. Now we can see it is still higher, but we are now already going back into that negative territory. So if we look at crypto ETF net flows, they are now, this is reflective of yesterday. So that was down, but then that also doesn't take into consideration strategies inflows, which could maybe tomorrow, if we look at the net flow for today, we could see a different perspective or picture. But this is also showing that in March, we had a lot of negative flows. So we had a lot more outflows than we had previously. And so that is also a warning sign. And that's saying, okay, if people are taking money out, and who's taking their money out and why? Is it because this is ETFs? This is usually more the big money. So I think this is an important tracker. And especially if we're looking at things like Bitcoin dominance, we were discussing whether it's altcoin season in January, and now we see that Bitcoin dominance is back above 61. So this is a clear warning sign, or it's a clear indication that there is a lot of fear, and in these times, investors favor more of the safe and havens, and that would still be Bitcoin in the realm of cryptocurrency. So this is all important data that we need to keep aware of or be aware of. Okay, and then we can see, the coin market cap. Okay, this morning, once again, if we looked at the total market cap, we did see quite a nice boost, but it seems like we've erased most of that, as I said, most of those gains. Other coins that were performing well, Cardano, which is still up. And then we were looking at a few other ones. Let's go see which are the top performing ones now. Okay, so EOS, this was actually, I discussed this last week, because EOS has also been relatively good. And I think it was the other day we had quite a big sell-off, but the one coin that did actually remain basically optimistic was EOS. So that token has actually been favored, or it's been getting a lot of positive traction, and there are a few others, but in the broader realm, or if we're looking at especially the first quarter, this has been one of the outperformers. I have used another indicator here, which is Bollinger Band, which shows us the 20-day moving average, and then it shows standard deviations. So the 20-day moving average is actually also, we can see prices, it was resistance, prior resistance, came in as support, and now there has been a break, and now prices are entering into, well, they are actually in over what's considered in technical terms to be oversold territory if we're looking at the oscillators and also the Bollinger Band, and a break of the Bollinger Band, that is often a potential signal for a pullback or a reversal, as we can see in other indications, in other events or circumstances. But for now, the trend is still higher. I think what we have realized is with crypto prices, things can change very, very quickly. But for EOS on the daily time frame, as I said, prices are now entering into like an extreme zone, or what could be perceived as an extreme zone. So I think the next candle, well, we'll have to see where we end today, and then we will be looking, as I said, tomorrow is a very, very important day overall. But for potential reversal setup here, I would be looking to see what this does, what the CCI index does, and also if prices do go back below the upper band or previous upper band, then we could look for a potential short-term setup for EOS. So there are still opportunities, and I think that's the thing. We need to realize that in any environment, we are always going to have opportunities. It's just which direction do you take? What's happening in terms of, what are the imminent risks, especially a day like tomorrow. We can expect a lot of volatility, and volatility can be good for markets, but it can also be really, really bad. But a lot is riding on basically what Trump actually indicates, and that's going to have broader implications for other assets as well. And it could, if he is actually more gentle, then, and those reciprocal tariffs aren't maybe as harsh as what has been indicated, for example, 25% on both steel, aluminium, and then on top of that, we've also got, he has said 25% on the automotives, which impacts countries like Japan and Germany and Canada. There's a lot at risk, and the Trump tariffs are currently what everyone is focused on, including myself. So that will be, I would actually be holding tight. And even though I think there are still technical setups, we really, really need to be careful of that volatility. So that's just my perspective. As I said, those levels for Bitcoin, I still think are really, really crucial to see what's going to be happening. And we might then get the deciding factor tomorrow when those announcements are made. And then Friday, we've also got non-farm payroll report, which is more job data. And we've got Fed Chair Jerome Powell who will also be addressing markets. So there's still a lot of risk currently behind markets. But I do think that the fact that crypto has been resilient, especially today, and is actually showing to have a mild recovery, to me, that is still a really, really good sign, in that, investors aren't completely rushing out and abandoning the crypto market. Okay, that's all for today. Tomorrow I will update you with any developments. However, it will be before those tariff announcements. So we're just going to have to wait and see. Also, a lot of automotive companies are now rushing to try see if Trump will budge and if there can be some settlements or agreements, basically so that those tariffs don't hit all sectors. But we'll just have to keep an eye on that and see how things unfold over the next 24 hours. Thanks, everyone. And please go to CoinW for more insights and for more updates. And I will see you all tomorrow.